Hello and welcome to Find Your Voice, where we interview thought leaders from our community at Podcast Guesting Pro. I'm Cassie Welford, and today I have the pleasure of being joined by Theodore Hicks. Theodore is a financial planner as well as an author and speaker whose career was shaped by navigating some of the most challenging market conditions of the past 3 decades. After experiencing both the dot-com crash and the global financial crisis, Theodore began questioning many of the conventional ideas investors are taught about risk, diversification, and riding out market losses. Theodore, welcome to the show.
Thank you, Cassie. Happy to be here.
Thank you. We're really looking forward to learning more about your expertise. And I would love to start by asking, you began your career before the dot-com crash. How did entering the profession at such a turbulent period shape the way that you think about investing today?
Well, the reality is I joined this industry right out of college. I joined in February 1999 is when I got all of my licenses and whatnot. And so we had about 13 months left of the great bull run of the 1990s. Before the dot-com crash came about. The reality is I joined the America's largest financial planning firm, and I was told during that crisis that this is a once in a career type of a crisis, so it's good to get it over at the beginning of your career. And I was young and naive enough to believe that, well, that logically makes sense, so I guess I'll just, continue on. So I continued on, and then eventually we recover and practice starts growing again. I buy my wife a brand new minivan and a bigger house for our growing family, and then we have the global financial crisis. But Cassie, I was told not the exact same words, but effectively that this is a once in a lifetime or a once in a career crisis. You guys said that already, so it really made me start to think differently about all of the things that I had been taught, because we're taught principles like diversification. Why would we be diversified? Well, the concept is because when you go through a crisis, if you're well diversified, the damage is going to be mitigated. Well, that actually didn't work. And so it just opened my eyes and really helped me to start questioning conventional wisdom and all the things that we are taught and the things that we hear preached from Wall Street and academia.
So quite a challenging start to your career. And when you look back at those early years, what did those difficult market cycles teach you about trusting your own judgment?
That's a great question. I would argue that it really taught me to not only question my conventional wisdom and the training and things of this nature, but to test things. I'm a Christian, and one of my favorite Bible verses is Acts 17:11, which says, "The believers in Berea were more noble than the Thessalonians, for they searched Scripture daily to see if what Paul said was true." Well, obviously that's, it's something to do with the Bible and questioning the teacher. And so it's not bad to question your teacher. I would argue that's noble. A good student should be questioning their teacher. A good citizen should be questioning their political leaders. And so that really opened my eyes. It's like so many of us graduate from college or university and then we stop learning. Well, that's not wise. A wise individual is constantly learning and questioning what they're taught and say, well, does this make sense? And in my book, Evidence-Based Investing, I say that very early on in the book, like, don't take what I write in the book as gospel truth. You should question it. And some of it is just, well, does this make sense? And when you go back and you test some of the theories that are so often preached in this industry, they don't make any sense, especially in light of the empirical evidence that the industry and the world has changed. We are far more interconnected today than we were in 1952 when some of these leading theories were first concocted.
I love that you're encouraging people to even question you as the author of your book. And can I ask, have you received any questioning from your readers, or
for the most part, I've gotten really good feedback from my book. The one negative review that I've gotten on Amazon is kind of funny because he said exactly the opposite of what so many other people have said. I have one-star review on Amazon, and it says, this is nothing but a thinly veiled sales brochure, something like that. But I've got 4 or 5 or 6 different reviews from people on Amazon that say something to the effect of, I really appreciate how this is not a sales brochure, or he's not advocating or selling his practice. I also have a professor in Ohio that is using my book in a couple of his classrooms. Well, that's pretty cool. My book is being used in a university classroom. I mean, that's quite flattering. So the way that I wrote the book, the word that I like to use, Cassie, is approachable, right? If you're a financial geek, you'll probably like my book. But if you're not a financial geek, you will understand my book because my dad preached, you got to write to the lowest common denominator. So anybody who picks up my book should be able to understand what I'm teaching because all I'm teaching in my book is I'm trying to give the reader permission to question what they hear from academia, from their financial advisor, from the financial news media. Just question it. And I'm trying to help them to understand why they should question it. But I'm not providing a lot of the answers. I'm just trying to help them. I'm trying to help remove the scales from their eyes, if you will.
That's a very humble approach. And I love that it's been used to now teach another generation. And that is a real credibility to yourself. And I think that 1-star review speaks for itself. It just makes all the other ones look even more credible, in my opinion. But it's very humble of you to share that and keep it real. Going back to your career, was there a particular moment during the global financial crisis when you realized that following conventional financial guidance was not giving clients the protection that you expected?
In this industry, we talk about something called correlation. And for the listeners who don't understand the concept, correlation is just how similar are two things. I'm wearing a suit. So my jacket and my pants are perfectly positively correlated. It's the same color, same fabric, same pattern, everything is the same. That's a high degree of correlation. The modern portfolio theory teaches that you should put together assets that have lower degrees of correlation. To put it in apparel terms, think of it like wearing polka dotted pants and a striped jacket. Well, that doesn't look very good, but from a portfolio perspective, they're different enough. So if in a period of crisis, one is going to perform differently than the other. That's the theory. But during the global financial crisis, everything did about the same thing. Everything went down. And so in the industry, we like to say that the only thing that goes up in a bear market is correlation. So correlation is measured from -1 to +1. That's how it's measured. And if it's closer to +1, that means it's like my suit jacket and my suit pants are +1, 1.0. Well, normally, again, there's varying degrees of control, but in a bear market, everything becomes very, very similar. And so everything goes down. And I walk through an example of that in the book where normally utilities offers a really good, quote unquote, traditional diversifier to materials and industrials, but that was not true during the global financial crisis. And so that conventional theory of diversification is going to save you. And we saw this again in 2022 when both stocks and bonds went down at the same time.
We've spoken quite a lot about difficult markets. And why do you believe that a strong financial plan can still fail if the investment strategy behind it is not designed for difficult markets?
Well, the argument there, Cassie, is that most people in this industry will tell you that you're a long-term investor and you should buy and you just ride out volatility. And theoretically, that's true. The problem is we don't know when the next crisis is going to happen and we don't know how long it's going to last. There have been multiple examples in our nation's history, multiple examples in histories of other nations, where the markets are negative or sideways for prolonged periods of time. And if you look at the geopolitical environment that we're in right now, I saw an article this morning about the massive amounts of U.S. debt. And the reality is there are so many developed nations that have a tremendous amount of debt. But if you do your history research, you know that a lot of political or geopolitical problems caused by excessive amounts of debts. Empires fall for excessive debts. So is the United States, for example, going to have a massive economic problem because of our debt? Well, I would argue the answer is yes, but I just don't know when. Is that going to happen in my lifetime? Is that going to happen in your lifetime? I don't know. And so the subtitle of my book is To Invest Well Over a Long Term. Sometimes you have to first survive the short term. So yes, you should be focused on the long term, but that doesn't mean you shouldn't make short-term adjustments. And most people who are managing wealth, either for themselves or for the retail public, they lack a lot of defensive strategies. And sometimes You just have to have a defensive approach, if that makes any sense.
What do you think traditional portfolio theory gets wrong about risk diversification and an investor's ability to recover from a major loss?
The thing that most people get wrong is, again, this concept of diversification is going to save you. And in periods of a bull market, yes, assets are going to perform differently. Bonds are going to perform differently than stocks. In a robust, thriving bull market, diversification is going to provide some degree of benefit. The problem is during a really bad bear market, when we have a global financial crisis, for example, or something of that magnitude, everything tends to perform the same. And the reality is that most people that are managing money for the retail public, they're not really trained to be portfolio managers. They're trained most people in this industry have sales training, go get new clients and shake hands and kiss babies like politicians do. And that's how you win business. Well, the reality, Cassie, is the markets are up about 75% of the time. And so that's fine in a normal environment when we have a minor correction or a minor bear market like 2022. 2022 wasn't that bad because it was relatively brief in duration. So you could easily argue that we're due for a larger correction. Now, again, I'm not trying to predict that we're going to have one. I know we're going to have one. I just don't know when it's going to happen. And I believe strongly that my duty is to protect the wealth. So one of the cliches that I like to say is guardrails and growth. So I want to put a guardrail around the wealth that our clients have accumulated, right? I want to protect it first. Yes, we of course want to grow it because most clients who come to us are in their 50s when they first start working with us, 50s, 60s, somewhere is most of the time. So we have a long runway ahead of us. So we want to grow the portfolio, but we first have to protect it. So it's guardrails and then growth. It's not growth and then guardrails. It's guardrails first, then it's growth.
I love that. Very memorable. Protect, then grow, or guardrail, then grow. We've spoken a little bit about your book, but I'd love to delve a little bit deeper. What was it that inspired you to turn your professional expertise into a book?
It was kind of a personal challenge, Cassie. I was, I tried to be a student of the industry, but also a student of the business, and there's two different things. And so I attended I was listening to somebody give me some talks about marketing and how I should market my practice. And I ultimately decided that I needed to write a white paper for my website for what we call a transitional piece. Like when you go to a website and before you leave, hey, Cassie, don't leave my website. Don't you want this free brochure, right? You've seen those types of things. Well, in my industry, that type of material is most often canned content. Somebody else wrote it. Somebody with an English degree wrote the content, and I can't use that stuff. It just bothers me. So I decided I'm going to write my own white paper. I'm convinced at least 12 people have read my white paper, but I wrote it. And then as I wrote this white paper, I knew I had to be brief in order for anybody to ever read it. But it was a challenge to be brief. And so I wondered, do I have enough to write a book? And then in chatting a few years later with a friend of mine, he had just written his first book and he knew the debate that was going on between my ears. And he was like, Ted, just shut up and start writing. And so I did. It was kind of a personal challenge. I know my dad, my late father, always wanted to write a book. So it was kind of like, well, let's see, can I do this? And as the book is brief, it's the other thing that we should say. It's not some massive tome. It's only 130 pages. And somebody advised me a perfect book that a prospective client might read is probably about 20 to 40,000 words, which sounds daunting. But as you put that word counter on in Microsoft Word or whatever you're using, I was getting closer and closer. I'm like, I think I can do this. So it was really just a personal challenge.
It's fantastic. And you've clearly achieved that and proved that you can write a book. And I love that it's not actually too big, because wouldn't you rather that your readers read that and then implement the action or ask some questions rather than just read for the sake of reading? Like, it's actually more.
Yes. So many years ago, I used to coach youth soccer and respecting where you live. So I used to coach youth football, right? And so I attended a seminar on coaching, and this coach was a college coach, and he was giving advice to all of us young coaches, and he was basically saying, don't make your training sessions too long. When you're training kids, You want them to leave wanting to come back, right? As opposed to dreading practice because it's 2 hours long. It's actually been more beneficial to make practice, say, 90 minutes. So I would argue the same thing with my book. I don't want to make it too big so people are dreading it or they never finish it. I want to write just a little bit to get them enticing. And if the Lord allows me to write a second book, maybe that would be a little bit longer, not too much, but just like the next step. So read this book first, and then maybe that's what we'll see what happens.
That's fantastic advice. And I love what the coaching theory that integrates into that as well, like leave them wanting more. And I think sometimes with a big book, and it can actually stop people from starting it in the first place. Like you mentioned about they might not finish it, but I think if a book is too big, it just looks incredibly daunting and it can stop you opening the first page. And that's such a shame after you've put such a lot into writing that. What do you hope that both... Sorry, carry on.
Well, I was going to say that, Cassie, that's one of the reasons I wrote the book, is I was having the debate in my head, as I told you, but at the same time, a young colleague who I just recently met asked me, Ted, can you send me a list of good introductory investment books? And I was like, yeah, of course, I'm happy to help. I'll send you an email. And I went to send him a list of good introductory investment books, and I couldn't think of any. Not that there's not good books. There's a ton of good investment books out there, but they're not introductory, right? Or I can think of good introductory books, but they're not about investments. They're about financial planning and things of that nature. They're painting too broad of a brush. Or the investment books, like one of the books, Todd Petzel wrote a book that I read in doing some research for my book. It's like 600 pages long. The average American is never going to read that. And I barely finished it, right? And so to your point, Cassie, if it's too big, if it's too overwhelming, the average American won't read it. I really wanted my book to be approachable so that somebody picks it up and says, I can read that. But, and beyond that, it has to be readable. It has to be written in a language that the average individual can actually understand.
And whilst we're just speaking about your book, can you just remind us of the title and where it's available?
So the title of the book is Evidence-Based Investing, and it's available on Amazon. You can get it on most online platforms. It is also available in a Kindle format, as well as the Audible version just recently came out, which is a little interesting that I made an Audible version because there's a lot of charts in the book. So you can get a free PDF at my website, theodorehicks.com. You get the supplemental PDF for the Audible version, but online platforms is where you can find the book. You can also get the introduction and the first chapter free at theodorehicks.com.
Perfect. Well, you've certainly made it accessible by having it available in all of those different formats, which I think is so important because everyone digests information in different ways. And I would love to ask you, what do you feel is the most important lesson that you have learned from challenging the accepted thinking in your industry?
It's a good question. It's the most important lesson I've learned from challenging. I think the most important lesson would arguably be, well, I guess it's just reinforcing the idea of being true to yourself. I mean, this is just, how God's wired me to question authority and question conventional wisdom. And I think that's, to maintain my integrity, I have to follow my conscience and do what I believe is in the client's best interest. And sometimes that means it's not getting the greatest rate of return. It's protecting the wealth. In other words, the priorities are protecting the wealth that I've accumulated. It's not trying to chase the leading stocks of the day. Don't take that wrong, Cassie. We obviously want to perform in good markets, but the priority, and this resonates with so many of our clients, it's just I've accumulated these dollars. They have to last the rest of my life.
Right.
And so far it's resonated with obviously a lot of folks.
I think that's incredibly valuable, being true to yourself. And in your industry, there's such a lot of trust involved. And for your clients to know that that's how you work, by being true to yourself, working with integrity and protecting their assets, it absolutely is going to set you apart in your industry. And a very, very important lesson, I think, in business and in life, right?
I think so. I think you have to, I'm certainly trying to to teach my son and not just my son, all three of our kids. It's like, it's our son's soccer season started last night. And so you want to listen to your coach, but you also have to balance out, because this is his, I don't know, fourth or fifth coach. So is it possible that this coach is going to teach him something that other coaches have not? Is it possible that this coach is going to teach him something that contradicts his other coaches? And the reality, Cassie, is in order to be knowledgeable on a topic, you can't read a book. You have to read a lot of books, because eventually you're going to find that some of the books are not very good books. And it's no different than in soccer. So he's going to learn some things that contradict other coaches he's got to have enough discernment to know which advice to follow. That includes his fatherly advice, because I did not play. He plays in the goal. So he's a goalie. I did not play in the goal. It is quite possible that I'm giving him bad advice. So yeah, I hope he listens to me, but he also needs to learn when not to listen. It's the same thing in my role. I've got to listen to experts, but I can't follow the experts, and I have to follow the evidence. And that's the whole concept of my book. Follow the evidence, not some prophet, not some expert who is, saying this stock or this economic calamity. Follow the evidence, not a prophet.
Wow. I feel like that is a mic drop moment to almost wrap up on. Thank you. And we're really looking forward to continuing working with you so that you can speak on even more podcasts and to reach a wider audience. And I would just love to know what has inspired you to use podcasts as a way of reaching even more people with your message.
I have come to the epiphany that more and more people are listening to podcasts as they're driving to and from work. I consume a lot of books. My daughter doesn't like it when I say I read a book via Audible. So I consume books via Audible. I consume podcasts via my earphones when I'm doing the drudgery of yard work. So podcasting is just a way to reach people that I ordinarily would never be able to meet. And again, what I do and how we serve clients, it resonates with some. And that's part of what we want to do is get our message out. But again, a larger part of it is to try to encourage other professionals, young professionals, experienced professionals, to question how they are managing somebody's wealth, because what I'm talking about in my book goes completely against conventional wisdom. And that's the point, but I obviously believe strongly in it.
Absolutely. Well, we are loving working with you so far and just want to wish you all the very best for your future success. And just to thank you for joining us today and sharing your value and your expertise.
Thank you, Cassie. It was fun.
Thank you. Just as well, briefly to ask, we did mention your website, but I'd just like to add that in at the end. If you can just share your website again, that would be amazing.
So TheodoreHicks.com is where folks can learn a little bit more about me and find links to the book as well as the supplemental PDF for the book. Again, if you're curious about the book, you can get the introduction and the first chapter free. And if that entices you, then yeah, sure, go buy the book on Amazon or wherever you buy good books. You can also find me on LinkedIn. That's where I'm the most on as far as social media is concerned. Just look up Theodore Hicks and you'll find me.
Perfect. We will share your links below. And thank you again for joining us today. And thank you all for listening.
Thanks, Cassie.
Thank you.